Yo, what's going on, guys? This is your boy Mac, and welcome back to another video. In this video, we're going to be talking a little bit more about supply and demand flips, how I use them, and then we also have a call out on GBPUSD that I actually gave to my mentorship students and my trading community students. So I'm going to go over that call with you guys, so you guys can feel free to take advantage of that setup right along with me. Now, before we get into it, just remember I'm not a financial advisor. I do not give financial advice. Anytime you do invest into the market, all right, there's going to be risk that comes along with it, and you should speak to a financial advisor before you risk any of your capital. All right. So we're going to be going over supply and demand flips in this video. We're going to be going over a GBPUSD trade, and then we may talk about some other things within this video as well. Just feel free to stay tuned if you would like to take advantage of those gems. Now, with that being said, if you are not a part of the YouTube family, feel free to go ahead and subscribe. I would love to have you a part. Leave a like on the video if you enjoy, and always feel free to share this with a friend who is interested in investing, who's trying to improve their investing skill set. All right. With that being said, let's go ahead and hop right into the video, and let's start to break down GBPUSD and get into these supply and demand flips. I'll catch you guys. Let's go. All right, so now that we are back on the charts, this is going to be the GBPUSD setup that we're going to break down. We're going to start on the daily, but really my points of interest that I'm working with are on the H4 time frame. So I will show you guys that in just a bit. But right now what we're going to do is we're going to talk about supply and demand flips and how you can take advantage, or how I take advantage. Now, a lot of you guys know when it comes to my trading, my main focus is macro and micro, right? I find my points of interest on a macro time frame using time frame correlation. It's simply just a certain equation that I use in order to correlate the time frames properly. I'll have a main time frame, and then I will use a certain equation to figure out what should my confluence time frame be based on that main time frame. Now, sometimes we do switch this up just a little bit. Sometimes we may use the M5 instead of the M15, or we may use the H1 instead of the M15 as our proper correlating time frame. But that is after you really understand how to correlate those time frames properly. Then you can feel free to take the rules that I give you and break them, right? So on the macro time frame, that is where I look for my supply and demand flips. However, I also look for them on the micro time frame. It just depends on if I'm day trading, swing trading, intraday trading, things like that. So first, we're going to talk about a supply to demand flip. So as you guys know, when price is ranging, or excuse me, not ranging, when price is trending to the downside, right? As you guys know, that means that supply is essentially in control. Now, my supply and demand regions are the exact same color. All right, just know that supply is always going to be located at my lower highs and higher highs, and demand is always going to be located at my lower lows or higher lows. So when price is trending to the downside, we know that supply is in control, right? As you guys can see. All right, let's go ahead and finish labeling this off. Supply and demand flips are also one of the main confluences that I use when it comes to actually trading. There are many things that I look for, a part of my trading plan, but supply and demand flips are something that I'm always going to pay attention to, especially if I'm day trading. It's very, very easy and straightforward to take advantage of supply and demand flips. So let's say you're continuing to have breaks of structure to the downside. That essentially means that supply is in control, right? And the market should be trending to the downside. Now, what is a supply and demand flip? Essentially, a supply and demand flip is when supply is in control and demand comes into the market to take over, or when demand is in control and supply comes into the market to take over. There's going to be a specific area where you see supply and demand flips take place, right? It's not going to be something where you have to guess or try to find or try to dissect. It's going to be very, very blatant and straightforward that, hey, we have a sweep of liquidity here, and then we have a break of structure going the opposite direction. Now let's look into supply and demand and see what's actually going on. And we actually have a couple of examples on GBPUSD that we're going to go over with you all as well. So here we can see that essentially demand is failing, right? Well, once we get to this point here, right, then we can see we have a nice push to the upside, a break of structure to the upside, and essentially any type of supply that was within this region here has now failed. And essentially this means that now demand is in control. As you guys can see. So in this case here, right, this is simply just a supply to demand flip. In this case here, now this would take place on our macro time frame, right? So we'd be waiting for price to tap into our macro point of interest, right? And then give us a micro time frame entry, and that just depends on how you want to correlate your time frames and things like that. Right? So this here is going to be a supply to demand flip. Now we're going to talk about a demand to supply flip. Very, very similar, okay? Except if demand is in control, then that means that price is going to be trending to the upside. Let's just go ahead and mark all this up. Now we're going to speed this one up just a little bit because I do want to get into GBPUSD for you guys after we go over a couple of examples. So in this case here, supply is failing, right? And supply is failing simply because demand is in control. Right, now we're not going to label this. Actually, no, let's go ahead and label. So we have demand here, we have supply here, and we have supply here as well. Perfect, right? Now, what happens is, and then we'll add our breaks of structure as well. Might as well. Now, essentially what happens is price takes out some type of demand, or in this case, a previous high or low, and returns to supply. And when price returns to supply, remember, this is on the macro time frame, so we don't just take an entry based on the macro time frame, but we look for certain confluences in order to say, okay, hey, now it's time to enter the market. Now I can do what I'm looking for on the micro time frame. But essentially, we'd be waiting for price to tap back into this region. Okay, so essentially, I would just set an alert here at this possible supply flip. Once price does tap into this area, then I would be going to a confluence time frame, all right, on the micro level and looking for my entry to take place here, and then looking to target this week low here, right? So that is essentially how I take advantage of supply and demand flips based on macro, micro levels, or time frames, I should say. Right, now let's go ahead and go to GBPUSD on the H4 time frame, and let's start to get into a couple of examples of supply and demand flips. All right, so if we just start on this area of the daily time frame, we can see that just based on structure, we had this high here liquidated here, right? If we're just looking at straight up structure, especially based on the higher time frame, I would use this area here. Essentially what we're going to do is we're going to figure out every single area where price is properly reacting to. So we have this area here, okay, essentially some type of demand that came into the market that was responsible for breaking this structure here with that nice push to the upside. Price does return back to this region, then we push away. Price comes back to this area, all right, gives us a reaction, gives us a failed reaction, then we have supply that comes into the market here. All right, we can also see that take place right here within this area as well. Now, if we go to the weekly, it's going to be in this area right here. If we go to the weekly time frame, let's actually turn this on the weekly, because on the weekly, it's going to be a little bit more clear just based on how I'm looking at the daily price action. Okay, wonderful. So if we go to the weekly time frame, which, you know, we're probably going to stay on the weekly because this is very, very straightforward. Now remember, time frames don't necessarily matter. Those of you a part of the mentorship program, you guys know time frames are literally just all in our head, right? It doesn't really matter what the time frame is doing or what time frame we're on. We're simply just applying rules and information. So we can see here, we have some type of demand that comes into the market here, responsible for this nice push to the upside taking out this high, liquidating this high here. Then price pushes down, right? We interact with this demand level here. We create a failed reaction, and then price continues to push to the downside. Now, if I were on the weekly time frame on GBPUSD and I was looking for some type of in this case, supply flip, right? Because demand is in control and we're looking for supply to flip this demand, right? I would use this entire candle here, right? This one right here as my area where demand came into the market before flipping, or supply came into the market before flipping this demand. We can see that after the supply came into the market, we do have this inside bar, which is also telling us there is a range on the lower time frame. Let me go ahead and highlight that for you guys. And anytime there is a range on the lower time frame, you guys know just as well as I do, that means that there is some type of supply or demand that came into the market. Right, so we know that there's some type of supply or demand, in this case supply that came into the market. Price pushes to the downside, gives us that break of structure with this wick, returns back into this supply here, and then continues to push to the downside. Now we can continue marking up our examples of supply that is continuing to flip demand. So we have another break of structure here, right, with this nice push to the downside. However, before price actually breaks this demand, we have what? A failed reaction with this nice push to the upside. Price then takes out that failed reaction and that demand, and we have the supply responsible for flipping it here. Price returns back to this supply that was responsible for flipping, pushes to the downside once again, giving us another break of structure to the downside. Right? So we'll continue. And this obviously created a weekly time frame supply chain, which is super good to trade from. Anytime you guys see supply and demand chains, definitely take advantage. If you guys want to know what a supply or demand chain is, or how I utilize it, feel free to drop it in the comments. I'm going to go back to dropping some educational content for you guys. Now that we're moving closer to the banks and things like that coming back for fall, right? Moving closer to August and things like that, we should see more and more volatility and volume start to pump back into the market. So we can see here, we have demand within this region. Price gives us a reaction, failed reaction. That reaction gets taken out as well as this demand fails. And then price returns back into the supply that was responsible for failing this demand right here within this area, right? Now, all of this stems from our first flip, which is here, right? Because essentially, demand was in control throughout this entire region, and we needed supply to flip demand for supply to be in control for this trend change here, right? So now that you guys understand supply and demand flips, right? So this was a beautiful example of a demand to supply flip, right? And then it's just going to be flipped for a supply to demand flip. So now let's actually go to GBPUSD daily time frame and let's discuss what we are looking for. So we do have a higher time frame weekly zone that we're in right now. Right here within this region. I don't know why it's not showing up. Let's go back to the daily and let's switch it over. All right, perfect. So we do have a weekly zone that we're currently in now, right? On the daily time frame, we do have somewhat of a slight transition for a nice move, possibly to the upside. Right now, we can still see that supply is definitely still in control. We haven't had a daily flip yet, right? So supply is still in control with this nice move to the downside. However, we can anticipate a possible flip by staying on our toes. So if we go down to the H4 time frame, actually, no, let's stay on the daily for just a little bit. So we can see that this area here was the last area where supply came into the market before taking out this demand here, as you guys can see. Right, so pretty solid here. So we do have this daily POI that I am looking at taking possible sells if price does pull back to this area and then give me what I need to see on my macro time frame, or micro time frame, excuse me. This is the macro here, right? Now, if we go down into a little bit more of the specifics on the H4 time frame, we can see that we do have a valid pullback here. Now, if you guys want to know the difference between a valid pullback and a pullback that is still a part of current trend, also let me know in the comments down below, and I don't mind dropping a video like that on you guys. Like, for example, this is not a pullback here, this is not a pullback here, yet this here is a valid pullback. And it has nothing to do with necessarily the amount of candlesticks. There are specific rules that I use to measure whether or not, even if it's 2 candlesticks, whether or not it's a valid pullback or if it's false, okay, still within the same trend. So if you guys want that information, feel free to put it down in the comments below, and I got you. So this is our daily POI that we're looking to take sells from. But in order to reach that daily POI, we need price to do what? We need price to push to the upside. Now, my first target, if we do get a trade, my first target is going to be this high here, around 1.24059, right? We see that we're creating a lot of internal liquidity. We have all of this liquidity resting here. That price swept once here, right? But we really didn't get much of a reaction. So what I'm thinking is these are just going to be relatively equal lows, and we could see price continue to move to the downside a little more, right? However, we could just push to the upside, leave this as resting liquidity, tap into this region here, and then sweep all of this liquidity after we get sell. So we just have to see what happens. We can either buy into the sell, or we're going to simply just sell and take out these points of interest here. Right, so these are 2 H4 points of interest. My first one, I'm using this wick here. This wick sweeps this liquidity here, also taps into a little bit of the accumulation that took place within this cluster of candles here, right? And then my apex, of course, is going to be this region here. So once price taps into these areas, I will be correlating this with my micro time frame in order to possibly look for an entry during a specific time of day. As you guys know, I do not sit on the charts and trade all day. There are specific times where I look for these trades to take place, right? So you guys can easily feel free to look for possible buy opportunities within these regions if you would like. One being here, second one being there, right? Now remember, I am not a financial advisor, okay? And trading this will come with a certain amount of risk. I would recommend you well, I'm only going to be risking 1% of my account at each of these points of interest. And if you guys want to know exactly how to correlate this with the proper time frame and exactly what to look for, feel free to join the mentorship program. We're currently running around 50% off. So if you guys want that code, feel free to ask me and take advantage. With that being said, I'll catch you guys on the next video. If you guys do want a little bit more assistance, feel free to drop it in the comments down below on what you need more assistance on, and I will be sure to go ahead and start banging out some educational content for you guys. With that being said, I'll catch you guys on the next one. Much love. Peace out.